Good afternoon, ladies and gentlemen, and welcome to the Financial Awareness Week or month, and especially this session about life insurance. The banking and financial service awareness for this month is under the slogan, Your Money Can, Be Smart, Senteyo Esobola. You remember, you can always get in touch with us on our Twitter handle, #YourMoneyCan, or visit our web portal at www.yourmoneycan.or.ug. This campaign is brought to you by Uganda Institute of Banking and Financial Services in collaboration with our strategic partners, that is Bank of Uganda, Uganda Bankers Association, Financial Sector Deepening Uganda FSDU, Uganda Insurers Association, and Summit Consulting. Particularly, our platinum sponsors are Bank of Africa, Uganda. Would like also to appreciate our other sponsors, that is EcoBank, Equity Bank, KCB, Absa Bank, EFC Uganda, Finca Uganda, Equity Bank, Pride Microfinance, Ugaford Microfinance, Stanbic Bank, Opportunity Bank, Bank of Baroda, Bank of India, BRAC, Uganda, Housing Finance Bank, and Centenary Bank. Ladies and gentlemen, you are welcome to this 9th webinar on the Banking and Financial Service Awareness Month. We have had discussions around the different pillars of financial literacy. For those of us who have been with us throughout this journey, right from the time when we had a presentation on becoming better at savings, and then we had one on becoming good at personal financial management. Then also we had one on savings as a tool for entrepreneurship. Then money and family. There was also how to strike a balance between savings and investment. Then also we had traditional modes of investment versus contemporary options. For those of us who have gone through this journey with us, you have also had an engagement on credit facilities and their terms and conditions. And then lastly, one which happened yesterday was early planning and happy retirement. Ladies and gentlemen, I would like to welcome you to this session on life insurance. I understand most of you maybe are hearing about this for the first time, but now this is the opportunity we have. This is the opportunity you have to get to know about what life insurance is, how life insurance can be used as a tool, not purposely for risk management or risk mitigation, but also as a tool for saving. I know you have quite a number of questions about life insurance, but this is the session we have. And at the end of it, I understand most of your questions and concerns will be addressed. Once again, I welcome you to this session about life insurance. Particularly, what we are going to be looking at is insurance as a tool for business survival. So insurance can be used for many different things, but this session is going to be about how we can use insurance to survive in business, or what are the good things about having insurance. Ladies and gentlemen, I'll go ahead to introduce to you our panelist. Our panelist is, sorry about that. Ladies and gentlemen, I'll go ahead to introduce to you our panelist. Our panelist is called Ruth Nduhwechile Tumwesije. Ruth is a graduate of business administration and management from Nkumba University and holds a postgraduate diploma in financial management from the Uganda Management Institute. She is a senior associate of the Australian and New Zealand Insurance Institute of Finance and majoring in life insurance. Ruth has also had a career in insurance for over 20 years, with the previous employers, including Aon. Aon is a risk management firm and advisory firm. Sanlam Life Insurance Company. These provide life insurance, which we are going to talk about. She also went on to work with UAP Old Mutual Risk Services, and from there she went on to become the country head of bank assurance at Standard Chartered Bank Uganda, shortly before she joined her current employment as the managing director, NIC Life Assurance Company Uganda. Ladies and gentlemen, I would like to welcome Madame Ruth Tumwesi Nduchile. But before she joins in, we are UIA, which is Uganda Insurers Association. We are an umbrella body of risk providers in the country for life insurance, non-life insurance, and reinsurance. Now, reinsurance is the insurance of insurance companies, if we can put it simply. So we are an umbrella body which pushes for the interests of these member companies. And in this, we work to advance the interest of the insurance and the reinsurance companies by adopting a common strategy that encourages and promotes cross cooperation and exchange of business ideas among members, but also we build on knowledge through research, influence, and enactment of favorable regulations. And also we spearhead views from our members to the government and other related quasi-governments and private bodies. We are founded in 1965, and since then we have walked the journey of insurance in our country over the years. Our vision is to be the most respected and effective trade association in East Africa, but at the same time also promote the best practice and highest standards within Uganda, within the Ugandan insurance sector, but at the same time safeguarding the consumers' best interests. We thrive on integrity, respect, cooperation, and innovation. Our membership has 36 members, with 21 members providing insurance for non-life. Now, insurance for non-life here, we are talking about insurance for things, if I can put it loosely, insurance for things which do not have life. And then we have 9 members, 9 insurance companies or 9 members which provide insurance for individuals and groups of people, as well as pension and annuities. Then we have 2 other insurance companies which provide what we call in our arrangement, we call it micro insurance, but this is largely insurance for the low earners, the low income earners. And then 4 of our members provide insurance to these insurance companies. They are called the reinsurance companies. Ladies and gentlemen, I welcome you to this session. As I've introduced our speaker, she's called Madame Ruth. She'll be giving us an introduction, which I've already done anyway, but she will take us through how we can use insurance as a tool for business survival. So ladies and gentlemen, you're welcome to this session of the webinar. Welcome on board. Thank you.
I wanted to talk about the relevance of insurance in our day-to-day lives and how insurance policy proceeds can support livelihoods amid the challenge of the COVID-19. So I'm just going to give a brief background in terms of where we are. So of course, the pandemic has caused a lot of personal, economic and social challenges, which are quite immense. And we have lost lives. Many businesses have been disrupted. Some have closed completely. Many jobs have been lost as a consequence. And of course, livelihoods have been grossly affected. And we know that the pandemic may be dealt with in due course, we hope, but the business shocks and the economic impact that this pandemic has caused, we believe it's going to take a number of years to recover from. So just looking at where we are as far as insurance is concerned, just like any other financial service like banking, the uptake of insurance in Uganda, we know, is very low. And right now it's contributing less than 1% of our annual GDP. I think the last time I checked, it's about 0.85% of GDP. Insurance is not considered a major tool for financial planning, and therefore it is never on the list of priorities for all most of the economic categories in this country. So it's not about the low end or the high end or the middle, but generally the uptake of insurance is still quite low in Uganda. Then many of us are not confident that if something happens, the insurer will actually pay. So sometimes you talk to people who even have the capacity to pay for an insurance policy, but that confidence is not there yet. There is a huge improvement if you look at maybe 20 years ago and where we are now. There is a bit of an improvement, but still people are not confident. And even when you're talking about life, which is more of a long-term policies, we sell policies of 10 years, 5 years, and somebody is asking, but will they really pay? So that kind of confidence is still low. And of course, then we have people who think that insurance is for the rich, which I think is a myth. When a rich person gets a problem, most likely they will have money to go and solve that problem. It is the people who don't have money that actually need it the most. But unfortunately, you find that we have this myth which says that insurance is for the rich. If we look at an example of non-life insurance, if a rich man's car rolls completely, they might have some money to replace it, either to repair it or to buy a new one. But look at those of us who are not in that category of the rich. Maybe the car you're driving is on a loan. Then when it rolls, you still have the loan to pay. Then you have no car. So what is going to happen? Are you going to take another loan, a second loan to buy a new car? Or are you going to be without a car until the loan is fully repaid so that you are able to take another loan and buy another car? So what point am I trying to make? That people who have less money actually need insurance much more than those who have more money. So why is insurance important? Why insurance? The main thing is peace of mind. Look at the example I've just given you. You take a loan of 20 million, you buy your car. You're given about 4 years to repay that loan. So if you insure that car, then you enjoy that peace of mind. You know that if something happens to this car, at least I will continue to enjoy my car and I'll continue to pay the loan as long as I'm able. So you have that peace of mind. Let's bring it at a family level. You're the breadwinner, you're taking your children to school, you're giving them this and that. So if you have a good life insurance product in place, for example, then you have some level of comfort that whether you're dead or alive, your dream for those children will actually come true in terms of the financial ability. So when you insure, you take care of the unforeseen in financial planning. You are able to make financial decisions with some level of confidence that if something happens that is unforeseen, the insurer will come and take care of any loss of either property or life. Then the second importance is it gives, maintains financial stability. So insurance gives financial stability in case of loss. For example, if a vehicle is written off, the insurer replaces it instead of the owner having to raise money to buy another one, which would have disrupted the budget. So imagine you're running a business and you have projected the amount of money you want to spend in that year and the plans you have, expansion and all that. You want to make sure that if the unforeseen happens, at least that plan is able to continue. So that's what I mean by saying that it gives financial stability. And the third point is protection of wealth, livelihoods, or lifestyle. When people are in gainful employment or business, they are able to afford certain life necessities, like the education of children, the healthcare, and lifestyle, all the good things you do for yourselves. So insurance helps the insured to maintain such lifestyles by paying money when the insured is unable to earn due to either death, disability, or illness. So instead of an asset having to get liquidated to take care of an emergency, if you have your items insured or your life insured, then that shock that comes with the unforeseen circumstance is actually taken care of by insurance, and then you continue to enjoy your life the way you did. Imagine if you have a problem and you're not able to work, maybe you got an accident, and maybe you're not able to work for 6 months or thereabout, and you have a product for income replacement. So your family will continue to enjoy the same lifestyle for the 6 months or 12 months with whatever the cover you have, that will continue taking care of your people as you help yourself to get back on your feet. So what have we learned during this time of COVID-19 and the challenges that have come with it? So with the outbreak of COVID-19 in Uganda and the resultant lockdown, a number of businesses like schools, hotels, tour operators have been closed, and several workers have been laid off, and others have not worked. So as a result, we have seen a surge in life insurance claims as a result of retrenchments, closed businesses, and a number of people who had policies, for example, with some of the insurance companies, have decided to surrender them or requested for paid up benefits. So all these are things that can happen along the way. So if, for example, if you've taken a policy for 10 years, but maybe the pandemic found you in year 5 or in year 6, a number of clients, we've seen them taking decisions and saying, can I have my benefits? And these benefits have helped people in different ways. Others are using them for income replacement. As people struggle to cope with the lost jobs and businesses, those who had policies have been able to access their benefits, and they have invested in alternative income streams. Where I work, we have quite a lot of teachers on our books, and we insure quite a number of schools. So we've seen teachers coming here saying, can I take my benefits? I'm thinking of setting up something small to give me an alternative income stream until I see the school opens, which has no definite date even as of now. Funding emergencies. A number of clients have been able to access their policy benefits to fund emergencies, such as medical bills. A number of families have lost their dear ones, and we've seen these policy proceeds come in to support these clients. Then funding the reduced income gap. Some of the employers have not necessarily laid off people, but what they've said, I'm going to give you 50% of your salary until the situation normalizes. So the policy proceeds from life policies, we've seen them being called upon to reduce, to cover the gap caused by this challenge. So way forward, what can we do as providers of insurance services? So I was thinking that as players in the financial services sector, not just insurers, but all of us, we need to work together. We need to be resolved on strategic messaging going forward to enable the masses appreciate that actually these products work and provide financial stability that we all need. So if you look at all the insurance companies in the market, I mean, both life and non-life, we have fantastic products. But for some reason, the message has not reached everyone. We need to do something to reach the masses. And insurance is an emotional thing. You're appealing to someone's emotions. You're talking about death. You're talking about the things that matter most in life. You're talking about loved ones. So we need to craft together these emotional messages and get it down to the masses. For example, what are we going to talk about? COVID is here with us. We have no idea how long we have to live with it. We therefore need to plan like it is here to stay, and our communications must be strategically designed to appeal to the emotions of the masses. And it's a fact, everyone is at risk. We are all at risk. We are all exposed to the risk of COVID-19. While in Uganda it's been difficult to talk about death, I think now it is inevitable. Whether we like it or not, we have to talk about death because it is with us. And we are hearing of people going to bed and not waking up, whether it is COVID or non-COVID, but it's a fact that we are living with, and we need to talk about it. We are all exposed to COVID-19. We need to ask ourselves the tough questions of whether, if you're two parents in a home and one parent is not there tomorrow, will that parent be able to pay the bills? Will they be able to feed the children? Will they keep them in school? Will they pay the medical bills? If the answer is no, which insurance product can bridge the gap? And then we start the conversation. Sometimes when you engage people around these insurance products, they appreciate, they like what you're talking about, but they say, I'm not ready. And in my view, less cover is better than no cover. So at times the premium payable, you look at your needs, and let's say you have 4 children, you have this, you have that, you have a mortgage in the bank, you have that. Then you look at the insurance product that would be adequate for you. It's actually going to cost you a substantial amount of money on a monthly. So most of the time people say, let me wait. When I'm ready, I will let you know. But I'm saying that less cover is better than no cover. At the time, so instead of premium being a hindrance, it is better that you start with what you can afford, then you can increase the cover later for adequate coverage. Strategic synergies as players in the insurance market, in the financial services market, what can we do together? Maybe some of the reasons why we have struggled is because every member is trying to do something in their own capacity. And of course, we have competing priorities. And then we end up doing a very small piece of what we are supposed to do, and it's taking us long to reach the masses. So can we think of strategic synergies in order to drive the message home? It is important to build synergies as financial service providers and drive the message to the masses on how relevant insurance products are and how they are useful tools in financial planning.
Okay. Thank you, Madam Ruth, for that brilliant presentation. I think now it has shed more light on the aspect of insurance and how beneficial it is. Ladies and gentlemen, right about this time, we would want to welcome questions from you. And there's also a poll which is being prepared by the Institute of Banking, which will be filled by you. I don't know whether it will come first before we go through the question and answer session. You can use the Q&A chat box to post your question there for the speaker, such that we can have it attended to. Anything you want to know about insurance, any information you have heard about insurance, which you think you would need to ask the experts, she's here. She will respond to some of those questions as we wait for the poll. If I can, maybe as we wait for questions, I've had the question here from someone through another line. He's asking, and our speaker, someone is asking that we hear about this talk of insurance for education of children. What is it about and how does it work? There's this education for children. Does it mean that the insurance pays for my child's education? What is it about and how does it work? Maybe if you can help us shed more light on education for insurance, how it works. Thank you.
All right, thank you, Badru. So we are 9 life insurance companies in the Ugandan market at the moment. And I think all the 9 insurance companies have an education product on offer. So I will not be able to elaborate what each of them offers, but the common denominator is one. Put some money aside on a regular basis, okay? And the purpose of that money is marked as the education of children. So we have insurance products that combine risk and saving. So let me quickly explain risk. What is risk? So a risk product means that there has to be a trigger event. And that can be something like death, like disability, critical illness, and things like that. So you have the option of saying, as long as I'm alive, I'll be able to pay the school fees of my children. But if these 3 things happen, I will struggle because I'll not be able to work. So can I have a product that only avails benefits in case of that? Then you'll have to go for a risk product. But then there is saying, okay, I don't like it when I pay insurance for many years, and then if nothing happens, I get nothing. Then you might be the kind who wants to go for a product that combines risk and investment, or savings, should I call it. So always you'll find that the attraction to such a product is in case you're not able to continue doing what you're doing to provide for your family. So how does it work? It means that if you say you have a need of, let's say, 30 million in 5 years, when the child is going to the university or is going to high school. So you can take a policy for 5 years. Maybe every month you're going to pay 200,000. And if nothing happens at the end of the 5 years, then the sum assured plus the bonuses will be paid to you. So that's how it works. So the payment is either available when a trigger event happens along the way, something like death or disability or critical illness, or if nothing happens at the end of the term, then you get the maturity benefits. So in summary, that is how most of the education products work that we are offering in the Ugandan market. I hope that clarifies.
Thank you. I think that has been all answered. And then also before we go back to some of these questions, someone was asking that we hear about life insurance. Does it really benefit only those who have died? Because I think it's only for the dead people. And what are the requirements to have your claims be done? Maybe in the event that the policy has matured, what are some of the basic requirements and how can I go about the claims process?
Okay, life insurance does not benefit the dead because the dead person doesn't need anything. The dead person only needs to be buried. And there is funeral insurance to cater for burial expenses. So like we've been discussing, life insurance, it helps the people surviving to cope with the impact of the loss of the person who was, let me give an example of a breadwinner. So let's take an example of a family. You have a family, you are either the father or the mother, you have your job, you earn, you pay school fees for your children, you buy them whatever they want, their livelihood depends on you. So the assumption when you're designing this life insurance product is if you are not there, or if you're not able to do the job you're doing, what is going to happen to these people that you've been looking after? In Uganda, we have a challenge of the dependency ratio. I'm told for every working Ugandan, I think about either 5 or 7 people are dependent on that single individual. So imagine yourself, you're going home, you get an accident, both legs are gone, or you get a stroke, you're not able to work. So the question is, what happens? There is a financial consequence that follows that unfortunate event. So life insurance also cannot deal with all the problems that comes with that problem. However, it can contribute to the extent that you had paid. So if you take out a policy for 30 million and that unfortunate event happens, the life insurance company will pay that money to your beneficiaries, to your loved ones, to your spouse, to your children, depending on how you filled in the forms and who you decided that should be paid if you're not there. So life insurance does not benefit the dead. It benefits those who remain to cope with the financial consequence of the loss of the person that they were dependent on. Is that clear?
Thank you, Ruth. At least it has been cleared. Many people thought that life insurance benefits
so
only
we are dealing with the financial impact of the death.
Okay. I think people have understood. So life insurance deals with the financial impact which has been left behind of someone who has died and who was a breadwinner. So the gap he leaves behind is what life insurance refills. Now, someone was asking that if the child is not studying in Uganda, can I still take a policy for them?
Absolutely. You see, when you take an education policy, you are going to nominate a beneficiary. So if the beneficiary is okay, whoever is going to receive the policy proceeds, if it is the wife, if it is your wife, that is assuming that you're not there by the time the policy proceeds are payable. If you are alive, you receive money, you, the policy holder, you receive money, and you decide where you want to take your child. So again, this is a financial service. What we provide is money. We help you go through the decision by offering different solutions for different challenges. But at the end of the day, what we pay out is money. How you use it and where you use it is definitely the client's decision. I hope that clarifies.
Okay, thank you. Thank you so much. And there is this feeling that life or insurance doesn't pay. And I hear someone here is asking, or rather I see someone here is asking the claims process, that it is not very seamless, which discourages the take-up of the policies. What do you have to talk about the process of claiming, and what do I need? What are some of the basics that I might need or I have to look out for before I claim for my insurance benefit?
Okay, for starters, maybe the insurer as the association, we need to start bringing out some of the testimonials so that people who have been paid can actually tell others that they've been paid. Some of the companies have been here for donkey years. NIC has been here since 1964. If people were not being paid, I think people should have made noise and maybe the company would have stopped cheating people. So talking on life insurance, I would say that it is the easiest form of insurance because the moment the heart stops working, the claim is payable. So all you need is somebody in that family to be able to reach out to the insurance company and provide the required documents. What are the required documents? It is proof of death. How do you prove that somebody has died? If the person has died in the hospital, there will be a document from the hospital confirming that the person has died. Then maybe confirming that somebody actually had a policy, and that's it. The claims process is very easy, it's very straightforward. And basically that is, as long as the information has been available to the insurance company, for straightforward things like funeral cover, insurance companies are able to pay within 48 hours. Okay. So it is really, really straightforward, and the companies pay. The testimonies are there. Maybe we just need to get the information out so people can know who benefited and whether that was really beneficial to the families.
Thank you so much. Someone, David Msoke, is asking, to what extent has life policyholders been helped during the pandemic? Have there been some claims settled during this pandemic? Maybe you can also throw more light on that.
Now, for example, Credit Life has an extension called retrenchment. For employers who have retrenched their staff, and the financial institutions from where they borrowed, they had a Credit Life with the end of the insurance companies in the market, those people have definitely been paid. Unfortunately, they don't pay the entire loan, but whatever is in the contract has been paid. Some people have had their loans paid for 6 months, others are being paid up to 12 months. So depending on how your financial institution negotiated their product. Policies which have matured are definitely being paid. People who have chosen to surrender, they have definitely been paid and we continue to pay. Policies which have become paid up because of the pandemic, again, people are not able to continue with the contracts the way they signed them. They have been paid. And those who still want their policies but are not able to pay the premiums, we've given them days of grace. Ordinarily, policies lapse when premiums don't come through after some time. The regulator had given us up to 3 months, but we have gone ahead to extend up to even 8 months without premiums, and we don't lapse the policies. So yeah, that is how we've been able to support our clients during this difficult time.
Thank you so much. Someone here is asking about the role of motor third-party insurance for motorists. Now, this is the other part which will be answered in tomorrow's session. This one is about life insurance, but tomorrow we shall talk about motor third-party. And then also there's a question about cyber insurance. Also, this is something which shall be talked about in tomorrow's session. Then also, our speaker, there's someone who is asking about unit trusts. And what's your view on those savings, rather on those as a saving or as an investment instrument, the unit trust? What do you have to talk about the unit trusts? Because I think he has a policy with UAP and he needs to understand or how they can be of help or how it works, in other words. Thank you.
Okay, so unit trusts are not an insurance product, but they are an investment vehicle. And maybe talking about UAP, I will talk to the extent that I know that UAP has an insurance business and they also have an investment business. So their investment company is able to offer unit trusts. So when you invest in unit trusts, you get returns depending on the investment performance of the portfolio. So what you put in is what you get. So the risk component is where we look at the happening of an unforeseen event, like death, like disability. So there is that element of whereby even if you are paying 100,000 per month and your sum assured is maybe 20 million, if you pay 1 premium or 2 premiums and you get disabled, the insurance company will pay the entire insured value, which is different from the unit trust. If you have put in 5 million in the unit trust and something like that happens, the only thing available is actually what you put in. So maybe the difference between unit trust and an insurance policy is that risk element. Thank you.
Thank you, Speaker. We have one from Jemima Semakade who is thanking us, making a good comment about the income risk placement. That's quite helpful. I think she'll have to look out for insurance. Thank you, Jemima. In the meantime, we are going to go into our poll section as we keep waiting for your questions for them to be answered by our speaker. So I think, Mr. Moderator, we can have the poll section and then we continue as we wait for more questions from our attendants. Okay, thank you so much. I think we shall proceed with the question and answer sessions as we wait for the results. Now, our speaker, someone here is asking that what happens if I outlive the policy I've chosen to contribute for? What happens in that case?
So it will depend on the type of policy you bought. So if it is, let's say, a risk-only policy, I'll give an example of a term assurance. Let's say you said, I have a mortgage in the bank. I'm going to pay it for 10 years and it is so much. So you decide that every year you want to make sure that you have a life cover that is equal to the mortgage, because you want that should anything unforeseen happen, you want your family to retain the house and then the insurance product pays off the mortgage. So the mortgage is for 10 years. So that means that you'll pay your premium for 10 years. And if you don't die within the 10 years, the policy ceases and there is nothing payable because you insured for either death or disability during the 10 years and nothing happened. So therefore, there's nothing payable. It is similar to how you pay for your vehicle insurance. I just want to bring an example from the non-life. So every year, let's say your premium is 1 million. What are you insuring for? In case you get an accident, in case you knock another vehicle, in case it is vandalized, you want the insurer to pay you. So if nothing happens during the year, then nothing is payable. And usually what happens, you can choose to renew or to stop the insurance. So that is how it works for the risk-only product. Then, if it is a combination of risk and investment, and maybe the policy is for 10 years, then you pay your premium for 10 years. And if nothing happens, then you get the sum assured at the end of the 10 years and bonuses or interest, if any. So those are the two options.
Thank you, Speaker. Ladies and gentlemen, let's keep the questions coming. A lot has been talked about insurance, what it is, life insurance, we don't understand it. This is the time we have to have all those questions answered. There are some members who are asking questions about motor vehicle insurance, like particularly Samuel Eyangu is asking about motor vehicle comprehensive. The vehicle was attacked along the way during the recent riots. That will be answered in tomorrow's session. And also Palu, who is asking about second insurance and third party. Again, that will be answered in tomorrow's session. Going back to our session of life insurance, someone here is asking, what is the minimum I can use to insure my life? And what happens if I'm unable to pay the same? Because we have talked about the fact that insurance is not for the rich only, even the poor can access it. So what's the minimum I can use to have a life insurance policy?
Wow, that question sounds tricky because the premium payable is a function of the sum assured or the life cover purchased. And how do we arrive at the sum assured? We look at your need. What is your financial need? Let's go back to the question of the education plan. If your child is going to Green Hill, and you know that in a term, Green Hill, I think they pay about 1.5 million, which is about 3.5 a year, and you have 3 children or 4 children, then that becomes your school fees need. But maybe if you're planning for university, you want to say that every semester, the child will pay maybe 3 million, and for 3 years, that need becomes your sum assured. So depending on the sum assured and your age, then a premium is derived, okay? So I'll not be able to give you a straight answer because you'll best understand it maybe using a demo. But also if your need is, let's say 50 million, maybe the premium becomes 300,000 a month, you might feel you cannot afford to put 300,000 a month. So like I said in my presentation, that little cover is better than no cover. So while your need is 50 million or 30 million, you might say, okay, let me start with 5 million because that's what I can afford. Then maybe we'll compute for you the premium, and it can be anything, 50,000. We even have products of less than 50,000, products of 100,000. So again, it depends on your need and your affordability. So I have no straight answer in terms of how much, what is the minimum. Again, it goes back to your need. We also have micro products where we are insuring people for as low as 500,000, and you find that maybe the premium payable is 10,000 or less per month, or 50,000 a year. So you need to get my number and we talk.
Okay, thank you so much. There's also another question here from the members. Now that some have been interested about having life insurance, what do they need to, okay, what is required for them to have a policy? What do I need to go with to a company? How do I start, or how do I initiate the process of having a life insurance policy now that you have talked about the benefits of the policy? What do I need?
It's as simple as calling our office. An agent can come to you or you can come to us. We are flexible on that. And then you fill a form and you pay your premium. And then you give us the basic information on your KYC, things like your ID. And the form asks you those pertinent questions about yourself, what you do, your residence, your address. If you're not available, who is your next of kin, who is the beneficiary, and things like that. So it is very simple, it's very straightforward. Just reach out to us, and it's easy to come to us, you can come. If not, we can send you someone. And I believe it's the same for all the companies in the association.
Okay, thank you so much. I think that has been well understood. And also there's another related to that. Someone's asking about the number of field agents who come to our offices to sell insurance. How do we tell those who are genuine and those who are not? And how do we know that what they are telling us is true and it's not exaggerated? Well, maybe I think you can also wrap up that it is related to what you have talked about.
Okay. We try to give agents identifications. So the agents should be identified, but you also have the option of calling the office. Most like, at least when you are filling the form, there is the telephone contacts, and you can call our office or any company's office and just double check. And also, most importantly, we discourage cash. Where there is no cash, there is less motivation for distorting facts and exaggerating benefits. So we encourage clients not to pay cash. You can pay through the bank, you can pay through mobile money, and subsequent premiums can be paid through payroll deduction or through the bank debit orders. So I think basically that's it, but you can really check with the company and confirm in addition to the identification.
Okay, thank you so much. Also, we have another question from Abdullahi Ali. He's asking, the presentation was hopeful. I would like to request the main differences and similarities between conventional insurance and Islamic insurance. Because I understand he's saying that you talked about conventional life insurance, but what's the main difference between life insurance, conventional life insurance, and Islamic insurance? I think that's what he's trying to put forward. Badru, maybe you draw a line between what is.
Badru, would you like to take that question? I don't know. Do we have Islamic insurance available at the moment in the market?
No, we don't have.
So right now we don't have. But anyway, conventional insurance is about risk and compensation. So that probability of something happening or not happening is what Islamic insurance does not agree with. So Islamic insurance becomes more of, if the insurance company makes profits and I'm a policy holder, I would like to participate in the sharing of those profits. And if there are no profits, as a policy holder, I understand, I don't expect anything from the insurance business. Now, there are things that I've forgotten. Maybe Badru will remind us. There are things that the Islamic religion doesn't agree with. There's something called riba. Is it riba?
Yes, interest.
Okay. So
okay, maybe
that is the little that I can tell you, but I think at the moment it's not available in the market. But I think there are things in the works. And maybe when the products are available, some communication will be made and sensitization for people to appreciate the difference.
Okay, thank you. And then also, I think before we go to our poll statistics, last question here, I see Jemima is asking, I thought insurance is like savings. It's unfair to put money for 10 years and get nothing from it because someone has outlived the policy. I think maybe you can throw more light on that, on the fact that maybe insurance doesn't pay, and maybe also to draw a line between insurance and rather between a question which is similar to that is the difference between saving in a bank and saving in a life insurance company, because both of them are modes of saving. So how do they differ? Where are the benefits?
So like I've explained, insurance companies do provide savings products and protection products. Now, where you say it is unfair for you to pay money and nothing's payable at the end, I think then I will take a bit of time to take you back to the basics. So if you look at, for example, medical insurance in this market, it is the biggest in terms of premium. People really buy a lot of medical insurance. Of course, not everybody gets sick, but also in terms of payouts, they pay the highest. If I give you an example of Credit Life, commercial banks pay the biggest amount of premiums in this market, but they also take it back in form of claims. So when you are, as a client, you're part of that pool, it makes you feel like insurance companies are making a lot of money and paying out nothing. It's because you don't receive this information. So the people who don't get problems are the ones who pay for those who get problems. And that's why insurance is able to be offered at an affordable rate. Otherwise, it would be, imagine if the premium is equal to what you're protecting, it will not make economic sense. It will be too expensive. So again, depending on the product, there are products that you can only buy as protection products. But if you feel it is too unfair, then please don't go for the risk product, go for the savings product. And then I don't want to compare saving in an insurance company and saving in a bank. Saving in a bank, you only get interest. And usually that interest is not high. But the attraction to insurance should be the protection. Because here we are saying that you take a policy of, let's say, 50 million. Your monthly premium is maybe 200,000. You pay 200,000 once and you get an accident or you get a stroke and you're permanently paralyzed and your family receives the 50 million. Where does it come from? It will come from these members who didn't get problems. And that's how insurance works. If all the members in the pool all get problems and they all get paid, the pool will not work and insurance will not be affordable.
Thank you. And I think we have one more last question. I think it's the last question. And someone here is asking, since these are long-term policies, how can I be able to make changes on my policy? Is it possible to make changes on the policy or it's not possible? I think that will be the last question as we wrap up.
So again, it depends on the product. When you say making changes to a policy, I wish I would know like what sort of changes. For example, if you take a 5-year policy, then along the way you notice, 5 years is a short time, let me make it 10 years. Yes, you can come. So you talk to the insurer and they endorse the policy and they can change it. If maybe you started with a higher premium of maybe 500 or 1 million shillings per month, your earning potential has maybe changed, and then maybe you think you can no longer afford the premiums, you can speak to your insurer and they can change the sum assured. They change that product, maybe they can change the sum assured and the term, and then they can give you an installment that fits within your plan. So yes, changes are possible. And how do they happen? You speak to your insurer and they endorse your policy.
Thank you so much. And thank you so much for your time. And we appreciate the time you have sacrificed for this wonderful webinar. And also would like to thank our members who have participated in the question and answer session. Right about this time, I would call on the Institute to give us maybe, I don't know if the poll is ready, to give us the statistics of the members who have been participating here. Okay. From the team which has been here, 35% of the people are between 30 to 40 years, and 30% of the people are 20 to 30 years. It's good to note that no one is below 20 years, and only 9% are above 50 years. And only 26% are between 40 to 50 years. We asked a question of, wanted to know the characteristics of the people who are on the group. And we asked the question, are you in school or university? 87% of the people are not in school. So we are dealing with the population, which is under the category of the working class. Just a few, 13% are in school. We asked the question of, have you ever heard about life insurance? It's good to note that 91% of the people have ever heard about life insurance. Only 9% have not heard about life insurance. And I think after this presentation, they are not going to be the same. They have had good information about life insurance, how it works, and how you can get it. Like I said earlier, life insurance is provided by 9 companies in Uganda. Any of those 9 companies can give you all what we have talked about here, and can take you through their product portfolio, and you choose what is best for you depending on your interests. 100% of the participants, or the people who have attended here, have said that they would recommend someone to buy life insurance, which is good. And this is quite encouraging. I would call on all of you at least to buy a life policy. Like the way she has said, it's a good product which can protect you against the risk of early death and disability, but also as a tool for saving. And it's also good to note that all the people have said that the presentation was helpful. We appreciate that, but we equally want to call upon all of you to visit any of those 9 companies to have a life insurance policy or to know more about life insurance. And then the other question was if people they ever heard about the Association of Insurance Companies. 83% of the people said that they have heard about the Association of Insurance Companies, which is UIA. Like I said in the beginning, UIA is an umbrella board of insurance companies in Uganda. So we push for the interest of our members. And in our session here, 65% were male and 35% were female. I would like to thank all of you who have participated in this webinar. Thank you for your time. And also I would like to use this moment in time to ask our speaker to say something about maybe particularly the company she works with, as she gives us her closing remarks for this session, and then I'll come back to wrap it up. Thank you.
All right, thank you, Badru. This is, so I work for Nick Life Assurance, which is a subsidiary of Nick Holdings, the oldest insurance company in the market so far. And the company has been here since 1964. And the only reason that the company can keep going is if it meets the promises or the commitments made to the policy holders. So I encourage all of you to please reach out to us, and let's talk insurance, and let's see what we can do together. As a business, how are you covering your staff? I know a lot of companies now have taken up group personal accident or workman's compensation. But if that member of staff is not at work, let's say it's a weekend or they are on leave, that person is still your staff. If something happens to them, I know that you, the good employers, would want their families at least to go away with something to be able to continue supporting the families. Again, the proceeds of the policy might not take away all the challenges, but they can contribute. They can reduce the economic shock that comes with unforeseen events like accidents, like deaths, like sicknesses, and things like that. So we'll be happy to engage. And I hope that in this partnership with the association and the Institute of Bankers, we'll continue having things that bring us together to talk about insurance as part of financial planning, because it is an insurance service. It's part of financial planning. Everybody needs it. You'll forgive us if we took long to reach out to everyone, but going forward, I believe we are going to be in your faces all the time. And even the upcoming adults, young adults, as they are thinking about having a bank account, they should also be thinking about an insurance product. That's where our drive, that's the direction that our communication drive is going to be going. Thank you so much.
Thank you so much, our speaker. We appreciate the time you have sacrificed for this, and would like to thank you once again. Ladies and gentlemen, we have come to the session, rather to the end of our session. Like, I will not forget to remind you, we are the Uganda Insurance Association, and we are located in Kololo at Acacia Avenue. We have a toll-free number which you can use to communicate to us about this and more of the things we have talked about. But importantly also, if you have issues you don't understand about an insurance policy or complaints, we will be able to help you and engage some of our members on issues which have come up, but importantly also to know more about life insurance. Ladies and gentlemen, we have come to the end of our session. Allow me to once again thank our sponsors. That's Bank of Uganda, the Uganda Bankers Association, FSDU Uganda, and UIA itself and Summit Consulting, but also not forgetting Bank of Africa and other banks like EcoBank, Equity Bank, KCB, Pride Microfinance, ABSA, Opportunity Bank, Bank of Baroda, Bank of Africa, Housing Finance, and Centenary Bank. We have come to the end of this session. Tomorrow we shall have another session on general insurance. Some of you have been asking about Micah was vandalized in the riots. How can I be able to claim? I've heard about motor third party second insurance. What's this about? Cyber insurance, all those questions. We have taken note of them and they'll be answered in tomorrow's session. And also, don't forget, next week we shall have the Digital Financial Literacy Week. Take note of that, and we shall be able to see you again tomorrow. Thank you so much.
Your money can enable you to live a better life only when you budget and save before you spend. Act now. Learn how to manage your income and expenditure correctly at the Banking Financial Services Awareness Month. Meet the financial experts. Learn how to deal with financial hardships like those caused by COVID-19. Be money smart. Be part of the Banking and Financial Services Awareness Month. Visit www.yourmoneycan.or.ug. Brought to you by the Uganda Institute of Banking and Financial Services, UIBFS.